Are you looking to get involved in the cryptocurrency sphere but can't quite figure out your best shot? ICX 101 is here to your rescue. Introducing iComics, the crypto backbone to your needs with a limited supply of just 200 million. Backed by all current and future projects of ICX 101, iComics offers usability like no other alternative out there, as it can be traded for tangible goods and services. Boost your wealth just by holding on to your iComics coins, and enjoy valuable incentives on using your coins every time. It just cannot get any better. Powered by Tron with low fees and faster transactions, you're entitled to complete ownership of your iComics coins once they're in your wallet. With forecasted exponential growth with time due to limited supply, iComics is ready to take over the crypto world by providing a platform that everyone loves and needs. What more could you ask for? So get hold of your iComics tokens now by getting involved with ICX 101, and don't miss another chance of changing your life from the crypto world again. iComics, powered by innovation.
The higher time frame gives you the general overview of the assets at that particular period. So we have to now go to daily time frame or weekly time frame. I started spotting gold on weekly time frame. So when we get to patterns, we are going to understand something, a type of pattern we call cap and handle. So before last week ends, we spotted cap and handle on gold, which means that we are expecting All right, sorry about that. I had a little network challenge. Okay, so when we look at gold, we will have what we call cap and handle. Then market was moving from 1913 and then get up to 1677 on the daily time frame. So that is the bigger range. Now let's assume if we are only on the daily time frame, each candlestick is a day. Each candlestick is a day. So last week candlestick was a bearish candle or a red candle because price respected their resistance. Now, this week started with a bullish after the red candle. What does it mean? It means that this trend is being continued. This trend is being continued. So those who buy gold at 1790 area, they can still be holding the trade. They can still be holding the trade. That's from 31st of January 2022. Those who buy gold, and they are the type of traders we call swing traders. They can still be holding that asset up to today, and they will still be in a good profit. Now, when market is going up, you must always look for buy opportunities than sell opportunities. So many people who look for sell at this level, they couldn't meet. Those who look for sell at this level couldn't meet. But those who have a reason to be seeing the buy, they are still enjoying the trade. Now, when you start from the daily time frame, you drop to the 4-hour time frame. You drop to the 4-hour time frame. Now, this projection was done on the 1 hour. The lines you are seeing was done on the 1 hour time frame. So at this point, my trend line was expected, broken, and retested. Then we are expecting consolidation at this level. All right. Now, what is the next expected move for gold? The next expected move is that we are expecting a ranging, like market to be going up, down. We call it accumulation phase. So sellers will come in up to a point, buyers will come in up to a point. And when gold creates a value support at 1890, we are going to expect a rally. That means more buying of gold. And then the change in direction will also be determined by the outcome of what is happening in Ukraine and Russia. Those are things that will really decide the direction of gold that particular time. Now, when we get to 1 hour time frame, you now see the breakdown of all that is happening on the bigger time frames. All right. Now, when you look at 4-hour time frame, it looks as if it's buying. If you look at 1 hour time frame, it looks like it's selling. Now, is it truly selling? Per my analysis, yes, but it is doing ranging and other stuff before it push down. Now we have those who trade candlestick formation. They have a reason here. We have a confirmation here. So those who are selling or who trade candlestick, they will be looking at this particular candlestick confirming. That's a pin bar. And that is one of my favorite candlestick. When a pin bar show, it gives some reason for market to take the other direction. Now we have types of them. When we get to candlestick, we look at that. Now, when you look at the 1 hour time frame, we are expecting a sell. And like I said on the 4-hour time frame, we are expecting some ups down in this region until a valid support is created. Then we are going to expect price will break the 193.73 region for gold. Now, because of multiple time frame, we have advantages and disadvantages when you are looking at the assets on 1 minute, 5 minutes, 15 minutes, 30 minutes, 1 hour, and so on and so forth. We have 1 minute is actually the noisiest time frame because the direction you may not know or really know where market is probably going. So let's go to the smaller time frame. And look at the smaller time frame. What can you see? You see a whole lot of choppy market structure. So it only favors those who are scalping or those who love scalping, but it also follows a rule. It also follows a rule. So currently, if you are on the 1 minute time frame, you'll be expecting, oh, okay, it's buying. And the question is, what is it buying to? And then if you are on 15-minute time frame, 1 hour time frame, you'll be saying, hey, it's selling. But the question is that, is it actually selling or buying? Now, why we need to understand multiple time frame analysis is that when you are in a trade or before you take a decision in a trade, you must be able to understand which market or which time frame is controlling the market at that particular time. So you may see that, okay, 1 minute has support and you buy, but 5 minutes does not have that support or is not respecting what you saw on 1 minute as support. So these are logics that move the market when it comes to time frames. Now, if you follow these rules, you make a decision and your decision will fail. Now, when you are trading on a smaller time frame or on a bigger time frame, when you do the analysis on a bigger time frame, you come to the smaller time frame, what you expect is that at that particular point, you get a good entry. Now, let me zoom out. All my lines I drew, I can't even see any of them. Which means that maybe my zones that I spotted, all this noise here are not even anywhere near my technical analysis. So let's step down to, okay, as it's updated, you've seen how far where the trend line that was broken before market start pushing up, where it appears. Okay, so the question is that now as market is hanging here, are we expecting a buy or are we expecting a sell? What are we expecting? So ideally, I will go to 5-15-minute time frame. I'll go to 5-15-minute time frame and then get a clearer version of it. Or that's 5-minute time frame, 15-minute time frame again. So on the 15-minute time frame, there was a high here. Let me just go a little bit technical. There was a high here. We have a high here. We have another high here. Then this high is lower than this high. So those who were expecting a sell, their hope is that in case market respects this high, they want market to sell. Unfortunately, price came up a little beyond that high. Now, what happened at this point, we call it hunting. They are going to hunt those who enter and expecting price to respect this high and put their stop loss somewhere here. So that move is to clear the stop losses. And then there are some people who also be buying. They will also put their stop losses somewhere here. Some also put it somewhere here. So when market is doing all this up and down, we call it accumulation phase. That time they use that to make money for especially those who don't really understand technical analysis and market structure, market formation. So when you are able to understand time frames and you analyze on them from the bigger time frame, you will know what is actually happening and then fight against it so that your stop losses will not be hand whilst price keeps happening, moving. Now, when you are making a trade or you want to take a trade, do not always expect that, okay, when I enter now, it will sell. No. Maybe you have entered here, you are expecting price to come here. Market will do logoligi, come up, do all these things, do all these things, do all these things before finally taking its direction. So all these things are part of trading. And when you look at the whole chart, it is always not moving just straightforward unless there is a technical fundamental or sentiment or a news. Okay, so a lot of people will be entering sell. But the question is, or the truth is that it's not yet ready to sell. It does not really giving any confirmation that it is coming to take the downtrend. So we will now see this whole structure here as pattern. We'll generate a pattern from it and be waiting patiently for market to break above the pattern or break below for how to make the next decision. But if you are a scalper, they will be getting opportunities. Scalpers will buy and hold up to this level and they're making that buy move. Then they will now wait on and seek confirmation on the 5-minute time frame. Then maybe make another sell to somewhere this level again. When they realize that it's going up, they will be doing it like that. And that is when market is doing this, scalpers are happy, but it gives them the opportunity to make more money. But it does not help swing traders. It does not help day traders. And then position traders, they will always find the best time frame to be in. Now, your time frame trading also depends on your equity you hold. Now, let's say you are trading with an equity of $10. Truthfully, 1 hour technical analysis or 1 hour time frame might not really help your decision. Okay, because maybe you spotted the move, and because one candlestick form after 1 hour, maybe some pullback is coming. For example, those who will trade with candlestick will have a reason to sell somewhere in this region. And those who want confirmation, they will enter somewhere here. Now, let's go back to the smaller time frame for us to check something. Now, maybe they enter the sell at this level, and then they are expecting to come out probably this level. The market came down a little and now pulling back. So this pulling back, that green thing going up now or pushing up now, because your entry is this first yellow line, because your entry is this yellow line and market is pulling up, it might, if you don't use your risk very well, it might take you out of the market before taking the move itself. So if you are trading with a low equity, you can do your analysis on the hourly time frame, but get your entry on 5 minutes or 15-minute time frame. Now let's just jump this to the 5-minute time frame for us to get some information there. So you can see that if you were to make the decision of entry on the 5-minute time frame, you wouldn't enter the trade on that level, at that level, because we have some support levels in this region on the 5-minute time frame. Now, when you go to 1-minute time frame, you will see another version of it. So you might wait after this pullback. There's one way or the other, make your decision somewhere here. Because we have resistances created here. We have zones that are here. So you making your decision in this regime would have been the best to save your equity as well, so that these pullbacks will not eventually kick you out of the market. Now, when you're also making a decision, you realize that your take profit for this sell is more valid on the 5-minute time frame. But we have support here, and then your take profit would have been hit before market make any decision to return here. This is scalping. It's just a short-term trade. So that is what you have to know much when it comes to time frames. So those are what we'll talk about time frame. Now I'm going to talk about one important topic we call trading by session. One important topic we call trading by session. We have 3 major sessions when it comes to Forex. We have 3 major sessions when it comes to Forex. So when you wake up in the morning, from 6, 7, 8, 9, it's a session. So we have, let's say, from here to here, one session, then to here, another session, then to here, another session. Now, what are those 3 major sessions? We have the Asia market. Please take keen and understand very well, because it's very important. Then we have the London session. Then we have the New York session. Now, all these sessions have special move or special assignment they do when it comes to trading. Now, on default, what you should expect on Asia market is consolidation or ranging market. So Asia market do something like this. Asia market to do something like this. Let's say something like this. So Asia will do something like that. That is on default. Then London market will do what we call break above or break below. So the London market becomes the breakout. So probably, let's say, if market is meant to go down, then we expect the London session to break. So there's a support. The London market will now break it. Now, when the London market break it, between the time the London is about to close, 1 hour before London closes, New York opens and give what we call overlapping in the market. So at that particular point, there is high volatility in the market. Then the New York do reversal. After New York do reversal, consolidation will happen until the next morning. Now, these are not just the session. We have Frankfurt and other sessions, but when we categorize them, it's in 3 sessions. So the consolidation will happen till the next morning. So if the trend keeps going up, for instance, like this, let's say we are expecting an uptrend, then after this consolidation, London will break above, then probably New York will come and do reversal, and then consolidation can happen this way again. Then London will break above, then it will continue like that. Then New York will reverse it and up, 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 up. Now, what does this really mean? Maybe you are not getting it. All right, so when market is moving, it moves like this. That's when we just draw a pictorial. It goes that way. And then when it goes that way, there is a point where it can and do something like, should it go up, should it go down, should it go up, should it go down? So we can term this structure as the Asia market. And then probably, let's say this is a break above, and then reversal, then the Asia market continue. That is the rotation. Now, there are a few things that you need to note. When markets during the day, from 7 to somewhere 8 p.m., when there is a fast or a rapid move in the Asia market, then don't expect a major move in the New York market. Now, if this theory remains like this, nobody will do technical analysis. So there is always a twist to it. There is always a twist to it. Now, let's look at that twist. Then I'll come back and do some explanation here about it. Then we'll call it a night. Very, very fast and simple. So on this note, let me look at a second asset and currency, which is Euro US dollar. Let me look at the second asset, which is the Euro US dollar. Okay, so we are now on Euro US dollar. So let me break it down to 15-minute time frame. Let's see something. Now, we have price moving from here. Now, first, today's date is 23rd. So let's get that period. So 23rd starts from where? Okay, so we got 23rd somewhere here. So we got 23rd here. This is 12.
Lucas of Noy.
I don't know if some of you really know you are in Zoom and ready to learn. Okay, now this is the beginning of the period. That's 12 midnight. So we are now going to look for 6, 7. So 6 o'clock, this is 6 o'clock. Then 7. We are using GMT. So this is 7. So this area here to here was the Asia session. Then from 7 to 1, sorry, to 2 o'clock. So 2 is somewhere here. So 2 o'clock is here. 2 o'clock. So from that 7 to 2 is a London session. Please take time. Nothing should distract you, and understand this once and for all. So what we're saying that is that that session, the Asia session, acts as consolidation. Market actually consolidated, even though people who trade on the bigger time frame, smaller time frame, will see a lot of opportunities. But sometimes it may not be more than 50 pips. Sometimes it may not be more than 50 pips. That's on research. So if you are trading on the Asia market, you have to know your profit target, not beyond a certain limit that maybe market might not hit your take profit before changing direction. So we said that the London session break above or below. So the London session now break above the trend. So as the consolidation happened in this section, this break above. So as it's breaking above, the New York starts at 1 p.m. So somewhere here. So between this period, there is what we call overlapping, because New York open whilst London is about to close. New York opens whilst London is about to close. So that 1 hour, there are some traders who only trade that just that volatility time. Okay. So in this case, London break above. Yeah. Then there's an overlapping, and then New York cause the reversal. Now, what is the time? The time is 9:05. So the US market closed, is it 8 p.m. or 9? After that, 7 p.m. So after that, we will expect another consolidation. So what do you expect in the market tomorrow? If market is meant to continue a downtrend, then the London session will now break below after the consolidation. So it will now give us another structure. So probably we may be expecting market movement up to this level here, within this range for, let's say, the Asia market. So it may be ranging within this in the Asia market. Then if it is changing direction, then it means that the London market will break above. The London market will still break above, and then the New York will close it again. This is how market structure move and move and move and move. So we have people who trade only in the sessions. So when they come, they look at, they analyze how it happened, and then wait for break above. And then when the break above happen and they make their confirmation, they take the New York as a reversal and enjoy their trade. As simple as ABC. Now, when we expand this on 5-minute time frame, that is why a lot of traders use 15-minute time frame just to benefit from this particular structure. Now, let's look at it here on the 5-minute time frame. So, market was consolidating throughout the night, ranging, and then entered here. You see that there's no really major move. This was just the move, but this is not a massive move. Okay, then the Asia market break above the structure. So if it is a resistance, it breaks above. So after it breaks above, I will enter a buy here and then take some few pips on this level, respecting the previous resistance up there. Then after that, I will now wait for the reversal point where the New York comes in and enjoy this rapid sell. All right, I will enjoy this rapid sell. So it goes, continue and go like that until directions change in the Forex market. So just to recap, the Asia session serves as a consolidation market, and then the London serves as a breakout, which is above or below. The New York runs it and also causes the reversal. Then it keeps going like that. Now, what you would do is that download MT4 or MT5, take the time frame and spot the London session, the Asia market, the London session, the New York market, the London session, the Asia market, and New York. When you do it that way, you will definitely grab the concept. And on this note tomorrow, on Monday, we'll be looking at patterns, shapes that is drawn with all these sessions and market structures. Shapes that is drawn with all these sessions and market structures. So these are things that we're going to talk about today in brief and short. And we call it a night. If there's any question, drop it in the chat box. I will quickly answer, or you raise up your hand and I will unmute you so you ask your question.